YouTube, what it do? It's your boy Cool back at you with another video, man. In today's video, we getting straight into it. We're gonna be talking about how to use the Fibonacci and fair value gaps for perfect entries, step by step, by yours truly, Kumar. This is for the Focus Flow Discord. So, first step is to understand the Fibonacci, right? Let's start off with the Fibonacci actually is. The Fibonacci is a sequence. So basically, like you see right here in the circle. Let me go ahead and put this so you guys can see. You see the circle right here? This is the start. Pretend this is the start of a galaxy. Pretend this is the first day you was born. Pretend this is the seed of a plant that is going to bloom, right? Everything starts off with nothing, right? And nothing is the center point of all living things, right? It gets deep. So you can see right here, we go from 5 to 8 to 13 to 21. How do we do that? So we start off with 0 plus 1 equals 1, right? 1 plus 1 equals 2. 1 plus 2 equals 3. 2 plus 3 equals 5. 3 plus 5 equals 8. You know what I'm saying? And then 8 plus, what is it? 8 plus 5 equals 13. And then you go from 13 plus 8 equals 21. And then 21 plus 13 and so forth, right? So it comes from a 13th century mathematician named Leonardo Fibonacci, who discovered a number of sequences that appears everywhere in nature, in shells, plants, even galaxies, like I said. Traders use this same sequence to measure how far price might retrace before continuing a trend. In markets, the key ratios like the 0.618 and the 0.786 shows natural points where buyers and sellers often step in. Okay, so the Fibonacci is basically like a sequence in the universe, in the world, where whatever goes up must come down and whatever adds must multiply. Okay, so before you start even trading, you want to first find the swing point, right? That's going to be an area in the market where you see the price started and made a huge move with big, large candles. Okay, so step 2, find a clear swing high and swing low on your chart. If the market is trending up, draw your fib from the swing low to the swing high, right? This gives you levels where price might pull back before continuing the move, okay? So right here, this area is the swing low because you see market coming down, right? And it reversed and it started to go into another direction, or maybe it could be continuing from a bullish direction, but it starts from the bottom, right? It goes up, and once you start to see a pullback, that's where you will place the top of your Fibonacci, bro. So basically, you're finding the swing from here to here. Another example will be from here to here, right? Swing low, swing high. Swing low, swing high. Pretty simple. Okay, step number 3. Focus on the golden zone. Okay, so once you place your Fibonacci down, you're going to have a zone which is going to be the 618 or the 786 zone. Right, these zones are also known as the golden zone, the golden pocket, the golden ticket, whatever you want to call it, but it's the golden zone, and this is where you want to look for entries. Okay, this area is when large institutions and smart money often look for entries. It's not about guessing, it's about following the natural rhythm of price. So 9 times out of 10, 8 times out of 10, nearly as not much as 7 times out of 10. But a high probability is if you have a swing low to a swing high, which here to here, right, price is going to come back and retrace about 70 or 50% before it continues into the opposite. It continues into the same direction of the trend. Okay, so uptrend, pullback, entry, continues to uptrend. Boom. Step number 4, mark fair value gaps. Okay, so fair value gaps is going to be when you see a large candle moving up, right, without any retracement inside of that candle, that will be considered a fair value gap. So the first candle's high does not overlap with the third candle's low, creating a gap. Okay, so this is the first candle. It doesn't go into this area. The second candle doesn't go into this area. So there's a gap in the market, and whenever there's a gap, it must get filled. It's like your stomach, you feel me? If you go 3 days without eating, there's going to be a gap in your stomach and you're going to have to eat. Otherwise, it won't work out for you. You know what I'm saying? It's not going to work out for you. You're going to starve and you might pass out and be deceased. So whenever there's a gap, you must get filled, right? Whatever, like I said, whatever goes up must come down. Look for fair value gaps, which are imbalances between candles. They happen when one side, buyers or sellers, move price too fast, leaving a gap that price tends to come back and fill later. Mark these gaps because they act like magnets for price. Step number 5 is going to be combine and execute. Okay, so you want to combine and execute your Fibonacci retracement with your fair value gaps. Okay, when a gap lines up with your 618 and your 786 zone, that's your high probability entry area. So if you come over here, we see the market, right? Market is moving, is moving, is moving. It breaks above a resistance. Okay, cool. It pulls back a little bit. This is actually a lower low to a swing high. This would have been a gold zone right here itself, right? But even if you didn't catch that one, guess what? Another one popped up for you. So boom, right here, you can see market shoots up, right? You will put your Fibonacci right here at the bottom. You see the Fibonacci 1 right here. And I'm going to show you guys how to set up your Fibonacci when we get to the trading view part of this video. So stay tuned for that. It's a pretty quick, pretty simple, easy video. We got like one slide left. This is actually the last slide of this presentation. And we're going to hop over to the charts so you guys can see an actual live example of what I am talking about. Okay, so the market swings low, swings high, right? You put my fib from here to here. The 0 is the top of the higher high. Okay, it's going to retrace to that 618. You see the 618 right here and the 786. So between this area is the gold zone. More times, it might come to the 382 or the 0.5 and just leave you. And you could probably take entries here as well. There's nothing wrong with taking entries here as well. But you have a higher probability of having a higher loss because you have so much room down here that you could have possibly taken entries if you were more patient. Okay? But you can see it barely wicked inside of the 618. You took your entries here, you would have been up for buys. You would have been making money right here as you see. Okay? So wait for confirmations like a break of structure or reversal candle. Then enter with your stop below the swing low and your target at the next imbalance or previous high. So my stop loss would be somewhere around here, probably below here, like right here. And my target would be the 0. So that would be a 1-to-1. A 1-to-2 would be the 27, and a 1-to-3 would be the 618. And you see it tap all of these right here. It's not going to happen all the time, but it is a high probability, probably 8 times out of 10, you will see this play out. All right, so that is it. That is my 5-step combo using the Fibonacci retracement and fair value gaps to catch sniper entries. Okay, it's based on natural market movement and institutional logic, not luck. If this helped you, drop the like on the video. We're gonna move over to the trading view section. Comment golden zone if you made it this far in this video. I appreciate you guys for watching so far. Subscribe for more videos and psychology videos. Stay disciplined, stay patient, and trade smart. Let's move over to trading view so I can show you guys a live example before I wrap this video up. Let's get it. Now, let's go ahead and show you guys a live example. We are on the S&P 500. These areas, just so you guys know, like these areas is where market session starts and ends. So the black area is Asian session, a low volume on this index. London session is this brown black area, not much volume. And in the red areas, this area and this area is New York session. So in these sessions, you will see the market start to create volume inside of the candlesticks. The candlesticks look a lot bigger. The candlesticks move faster. And there's a lot of more money being pushed inside of these trading hours because this is New York and this is a New York session pair. Okay, so what we're looking for is fair value gaps and swing lows and swing highs. Okay, so let's continue to move it. Right now it's selling out of an order block. We're gonna wait for the next day, see what happens. We're gonna mark this right here as the low because this is the day's low. New York's high was all the way up here. So we'll go ahead and take another line and put it up here. We'll make this blue and the low, we're gonna make that red. Okay, so blue is gonna be the high of day. And the red is gonna be the low of day. Basically what I'm measuring is I'm measuring where price was the highest point of yesterday to the lowest point of yesterday. Okay, so we're gonna use that as areas for targets or areas for support and resistance. Okay. So London we got coming in. London is bullish. London is pushing up bullish. Okay. New York session in the red now. We're in the New York session. It's broken bearish. Okay. So we got a fake. We got a fake out, right? And then we got a break of structure. Still didn't break yesterday's lows. So we want to be patient because overall trend is uptrend, right? And it did break the bullish trend line, but let's just wait because you know what I'm saying we're kind of playing with imbalance right here. So let's see if it breaks back above. No. Okay. Boom. This is perfect. It broke the low of day. Crazy. Okay. So now we're definitely inside of a bearish market. Continue to wait. We have a full fair value gap. This whole candle is a gap right here because it didn't get wicked into from this side or this side. The wick is literally right here. You can see the wick right here. So all of this right here is going to eat for 5 days or 7 days. You're going to get hungry and you're going to have to feel it. Same thing with the market. If it didn't touch that zone in a couple of trades and a couple of candles, it's going to have to come back and fill it. So right here is our fair value gap. Okay. So what we're gonna do here is we're gonna wait for a pullback. So let's go to the 5-minute now so we can see more of the market. For entries, we want to see a pullback up, some more. There we go. We're gonna grab the Fibonacci now. Put the Fibonacci. We can put it all the way up here. This is a good stop. Right, that's the swing high. And then we're gonna put all the way to the swing low. Our goal zone is gonna be this area right here. So the 618 and in between the 618 and the 786, that's going to be our goal zone. So we're going to make this, it's already gold, so we're going to make it yellow, right? That's going to be the goal zone right here. This is the goal zone, okay? We want market to come up into this zone for entries and then we come down. Usually it comes in and hits the 382 or the 0.5 and it leaves us, but the goal zone is really important because you can get more money for your buck. Feel me? You can get more money for each trade instead of just getting it right here. But it's also good to get in at the 0.5. It all depends on how the confluence lines up. And to be honest, it lines up pretty good because the fair value gap and the low of day is all right inside of this area. So let's see if it pulls back and hit it. Come a little higher. Okay, it just tapped it right there. You can see that would have been kind of hard for you to get in unless you were really paying attention, but you could even get in like even below right there as well. All right, target's going to be the 0. Stop loss is going to be the 1 or above the 1. Okay, you also have targets for the 27 and the 68 if you want to hold it longer. Okay, and we should see it just drop down. Okay, it came back into the 618 again, and boom. Okay, it's playing around, it's playing around. This is probably going to be like the next day trade right here. This is good. This is good money though, right here. From here to here, that's good money though. It's good money. Session comes in and take profit hit. Yay! Boom. And continues down, going crazy. Hope you guys got some value from this video. Like I said, if you got some value, go ahead and drop golden zone in the comment section below. Like the video, subscribe for more videos coming soon, and peace and love, y'all.